Hello, I'm Peter Burnett of the law firm of Burnett & Williams. You're about to watch an episode of From Injury to Justice. If you like it, please hit the subscribe button below. Hello and welcome to From Injury to Justice. Today we're going to talk about adequate insurance with Keith Seekford, who's here with me and who has a remarkable level of experience with individual and commercial insurance. Keith, thank you for being here.
Thank you for having me, Peter. It's good to be here.
Let me start by just letting you share with folks what your long history has been in the insurance business.
Been an independent insurance agent for almost 40 years here in Loudon. Represented personal, commercial. As an independent agent, we work for our clients as opposed to the carrier. So I'm not wed to any particular carrier, so we'll work on your behalf.
Tell me about how many insurance companies do you sell insurance for?
Oh, any given day, at least a dozen, if not 20. And then you have the Lloyd's of London markets that we work with. And when I say that, you got to remember each insurance company has a dozen to 24 insurance companies under their umbrella. So it's quite the repertoire of carriers that we have access to.
And I take it that pricing is one of the issues that is part of your selection of the right insurance company for any given client.
Yeah, pricing, the client is more concerned about pricing than we are a lot of times because of their own pocketbooks. But got to keep in mind, we're looking out for the best coverage for that need. Not every carrier is acceptable to certain exposures. And as a result, we try to find the best coverage for the exposure.
So you make a good fit.
Good fit.
Okay. Well, today we want to talk about those coverages that so often come up in the world of personal injury work. And I thought it might be helpful, because I know you're familiar with them, to just give us a few of Virginia's statistics when it comes to how many accidents are had, and particularly in Loudoun County. I think some folks would find it a little bit shocking.
Yeah, according to the Virginia Department of Transportation's latest statistics for Virginia crashes, now these are on our Virginia highways and interstates and byways. There's a crash about every 4 minutes in Virginia. Wow. 2.5 lives are lost each day in Virginia. 175 people are injured each day because of a traffic crash. And 1 out of 26 drivers in Virginia will be involved in an automobile accident this year. Broad brush, was about 126,000, 127,000 automobile accidents in Virginia last year, of which about half of them resulted in injuries. Most of the crashes occur off the interstate, which would be contrary to most people's opinion. As you drive up and down the interstate, it's only about 18% of accidents are in the interstate. 82% are on other than interstates. So, in Loudoun County, we had about 13 accidents per day in Loudoun County last year.
Wow.
And in Fairfax County, our next county over, they had approximately 34 accidents per day. So you can see the numbers are there.
Well, so it's pretty clear, yeah, those numbers lay out, prove, call it what you like, that there are plenty of accidents happening. And of course, insurance is a form of protection for those who are not at fault and who suffer damages. And tell us a little bit about what percentage of folks are insured with minimum coverage, with no coverage, or that's in a contradiction, no insurance. Yeah. And then those that have, and what you think is adequate insurance.
Yeah, good question. Approximately 10% of the folks out there are driving without insurance.
So no insurance at all?
No insurance at all. Okay. And then there are another 30 to 40% of folks that I consider are underinsured, don't have enough insurance if they are involved in an accident. And you got to remember the liability is both first party and third party. So we'll talk about that later.
And let me stop you there. When you say that you don't think they have enough, that 40%, as I understand it, are those that have the minimum coverage required by the state of Virginia,
That is
right?
correct.
Okay, which you, in your opinion, is insufficient.
Totally insufficient. Now, I understand economics are part of that, but from my side of the desk, I encourage people and your listeners to get as much liability insurance as they can afford. It is pennies on the dollar after that first $50,000 of coverage. Pennies.
And is that, as I understand it, about 80 to 90% of all accidents in which somebody is hurt and brings a claim are inside minimum limits.
That's my understanding, but I don't have that statistic with me.
Right, but assume that something like that's to be true, so that most of your first few $100s of premium dollars go to that coverage.
Absolutely.
And that's what makes it cheaper for the upper level coverages.
Absolutely, yes. The most expensive part is at first $50,000. After that, the rate increases, decreases at a decreasing rate. That's correct.
Those of us in my business keep a pretty close eye on what coverages are, and certainly it's troublesome when we run into folks that don't have any coverage. But likewise, only 3 years ago, the minimum coverage was $25.50, which, given medical expenses these days and wage losses and the like, just don't come near covering the claims that our clients have. But they have changed a good bit over the last couple of years. It's nice that the legislature has recognized the need for additional coverage. And as you know, we're now at 5,100. That is 50,000 per person, 100,000 per accident is the mandatory coverage in Virginia. And that's very helpful. And then another piece that you know well, and maybe you can explain for us, is the whole issue of stacking. The old way of having credit and all the rest is no longer with us, and the UIM stacking, if you would take that out of the nuance and tell us what that really means.
Yeah. As of July 1st of this year, the legislature allows stacking of UM or UIM claims in Virginia, so there's no takedown on, and this may be getting into the weeds.
Well, first tell us, though, if you would, what is UIM coverage?
Yes.
That's critical.
UM is uninsured motorist, and UIM is what we refer to as underinsured motorist. So those are it's found under your policy with typically matching limits and liability. So when someone hits you and they're at fault and doesn't have insurance, they don't have insurance or don't have enough insurance, your policy will kick in to pay the delta. Previously, with the takedown, it was dollar for dollar on the limits that you have versus the other party. And now it's a stacking arrangement where you can get your full limits in addition to the other party's limits, the at-fault driver.
So let me to give an example. Somebody's in a car accident and their case is worth $80,000. And the person that's responsible has minimum coverage, has $50,000. So their company pays in $50,000 towards the settlement. Right. But the person that was hit wanted to have more protection, so they bought $100,000 worth of coverage. Say they had a 100-300 policy, 100 per person, 300 per accident. Now that policy will pay the other $30,000, right? They'll pay up to $100,000 more on top of that 50.
Correct.
So
correct.
You can protect yourself against those 10% of drivers that don't have any coverage, and the ones that don't have enough, right?
Correct.
And so what do you recommend for coverages typically?
Well, I typically like single limit liability, and this is getting into the weeds a little bit, as opposed to split limits. And with that, single limit, starting at $300,000 minimum, if not $500,000. The delta, the difference between $300,000 in premium and $500,000 is typically $20, $25 a year, under $50 a year per car.
To get, and one more time, what is that difference in coverage for that $25?
About $200,000 in coverage.
Of worth of coverage.
Absolutely. And your uninsured and uninsured motors will match that same limit. Right. So don't be penny wise and pound foolish is what I'm trying to tell people.
Right. I have often thought that the split limit, the 100, 300, or 25, 50, or whatever it is, 50, 100, those split limits are really for the benefit of the insurance company, so that if more than one person in a vehicle is injured, they're really covered by at least two separate dollar amounts, two separate pools of money. So there's no conflict of interest, which heads them for the courtroom.
Yeah, so your listeners will understand. I'll try to explain the split limits versus a single limit in the buckets. So with split limits, which is the old way of doing insurance, not all insurance companies offer single limits. So you may be in a situation where your carrier only offers a split limits. And the split limits have three different buckets. The first bucket is the amount of injuries for that one individual. The second bucket is the dollar amount of injuries for the entire accident, for all people in the accident. And the third bucket is property damage. So to your example, $100,000 per person, bodily injury per person, $300,000 for the entire accident. So no one individual would get more than $100,000 in that accident, okay? However, what I like and what I recommend to my clients is single limits. And let's get a $300,000 single limit policy, okay? And that way, if there's only one individual involved, the injured party could receive up to $300,000 for that accident, not limited to the $100,000 in the single limit, the split limit form.
Well, and this might ring true to you. It's certainly been my experience, and it's just I haven't done any scientific study on it, but it seems like when I represent somebody who's been in a vehicle where there are 2 or 3 people hurt in an accident, that often there's one that's most injured of the 3, and then 2 others that have sort of minor injuries. And so if for example, with a 100, 300 policy, one person had an injury that was worth $175,000, and 2 other people had an injury that were worth $25,000 each. Now, with a 100, 300, the person that's got a claim that's worth 175 is going to get a grand total of 100. And then those 2 people that got 25 each are each going to get 25. Well, if you add them up, it's $225,000 total.
Right.
And so if it were single limit 300,000, it'd cover everybody.
Cover everybody.
They'd all get full value.
Yes, sir.
Right. I had the experience of changing my single limit coverage from years ago when I had it at $500,000 single limit, and it changed to $1 million single limit. And that cost, with 2 teenage drivers in the household, was $40 more per vehicle per year. And I was shocked by that, but you're telling me that's not unusual.
That is not unusual.
Let's talk a little bit about a couple of other coverage types that you see all the time. And that's medical payments is one. And one of the things that people don't fully appreciate when they come in to see me is that they have their own coverage, and even if the other guy is paying them, and if their health insurance is paying them, how do I get to collect medical payments coverage under my own policy? And I don't want to make my rates go up. So tell me, 1, if they can collect, and 2, if their rates go up.
Yeah, certainly they can collect under their own automobile policy for medical payments coverage. And it's a stacking situation that's available up to 3 vehicles in Virginia. Is it 4 now?
Yeah,
okay.
4 now. Yep.
Okay. So if you have, let's take an example, if you have $2,000 in medical coverage and you have 4 vehicles, and you would have technically $8,000 available for yourself and also anybody else in your vehicle.
Right.
It's not limited by the accident. So you can collect that in Virginia. It will not make your rates go up. And then you can also file a claim against the other party at fault accident.
And it's not an inappropriate form of collecting insurance. You've paid for that policy, even though you're getting double payment. You paid the premium with that in mind, and the insurance company knows that.
Absolutely. And the idea behind medical payments was it's goodwill coverage. It's there to help those to pay their deductible on their health insurance and other ancillary bills, co-pays, things of that nature. So, yeah, that's what it's there for.
Yep. Well, and another one that's kind of a bigger deal, certainly in numbers, and for a fair number of folks that have it, is umbrella coverage. Talk to us a little bit about how umbrella coverage fits and how UIM fits or doesn't fit with UIM with umbrellas.
Yeah, I'm glad you brought that up because I can't stress enough to folks out there that a personal umbrella is well worth the money. I'll use you as an example, or any attorney out there. Most attorneys charge an hourly rate. I will tell you, a personal umbrella, you can obtain a personal umbrella for less than an hourly rate of an attorney. It's money well spent. It's $1 million. Let me just start it there. It's $1 million of excess coverage over and above your homeowner's liability and your automobile liability. Now, there are certain minimum thresholds to qualify for an umbrella. Most companies say $500,000 of liability on your auto and your home in order to qualify.
And just to interrupt you there, that's so that because it sits on top of.
That is correct.
And we're back to that most claims being
under
way low.
Yep.
And so one of the things that makes it inexpensive is it's so infrequently comes into play, but when it does, you need it.
Absolutely. And $1 million is the starting point, and you can go to $2, $3, $4, $5 million and up from there. $1 million excess insurance over and above your own auto policy. So we've been talking about the injured, but what if when your wife or children hit somebody and they are seriously injured, this umbrella is going to come into play to protect you. Okay. With UIM coverage, uninsured motorists or underinsured motorists, most companies until recently would not offer excess UIM coverage in the umbrella. You can now select that coverage, tell your agent that you'd like to have uninsured motorist coverage under your umbrella policy, and most companies, not all, will give you up to $1 million of uninsured motorist on your umbrella.
Yeah, and that's why years ago I switched from the 500,000 to 1 million single limit coverage, is because it also included the UIM.
That's correct.
When I couldn't get it in an umbrella.
That makes sense.
Yeah. Well, you know what? One of the things, and it's my last point here that I find a little bit odd, is something. A statistic is that 90% of all life insurance policies are never paid out because people buy them for protection. The protection's unneeded. Nonetheless, people have them in case something happens to them, for their kids going to college or for their spouse having support and all the rest. But for some reason, they missed that same point on automobile coverage, which is much more likely to happen to them statistically.
Yes, sir.
So how do you convince folks to spend that very small extra amount of money to more fully protect their family?
Yeah, well, we try to counsel them, show them the difference. And at the end of the day, it's their pocketbook that'll make the decision. Unfortunately, many times it's that horse is already out of the barn. The people that come to me that want high limits on liability is they've had a bad situation in their family at some point in time, and they value the amount of insurance that's needed to protect themselves.
Keith, I really appreciate your coming today, and look forward to continuing to work for you with you as we have for many years. And also thank you for watching today, yet another episode of From Injury to Justice. And we hope you found it informative and will join us again. Thank you.